I just explained about myself. You all know about myself, like what is something. So I'm still Chandni Powdavatta, Attention Department of Applied Accounting and then lecturer there. Master's from University of Srilanka. Basic degree from the University of Lanka, member of the University of Sri Lanka and WA plus the other certificates as well. I'm doing the research coordination part at South Campus. Both beyond jobs. So if you want to reach me via regarding the education matter or the other matters, you can reach me via this mobile as well as the email, official email provided. If you have any clarification regarding subject matter, you can reach me via these two methods, right? No issues. Right. So the course content that we are going to start is business finance. BSAA 2105. Right. So what is the course status? This is the course subject which has how many credits? 3 credits, right? This semester, how many subjects do you have? 6 subjects. What are the 6 subjects? Business finance, and the other one financial reporting, human resource management, and then business communication, and then audit and audit, and last one MIS, management information system. So I hope the all subjects are the core subjects. These are in a different. So our course objective is develop the students' ability to analyze the and apply the core financial management concepts. So the first thing you have to understand is accounting and the financial, or as financial management is 2 different aspects. So therefore, you don't need to have a double level system here. You don't have the understanding regarding the double level system to study this business finance course. So therefore, our objective is to apply the financial concept into the day-to-day life. Okay, so I hope you all know the course pillars. But degree programs, in our degree program, how many pillars are there? How many pillars? 8 pillars, right? So what are the 8 pillars? Reporting, assurance, business strategy, and the financial analysis, and taxation, knowledge, that means recitation, internship, and the last one, professional skills. So this is as per your curriculum. So this is the 8 disciplines you have. Each and every discipline, you are getting the medal for the highest mark. So therefore, 8 medals are there now. Right. Why as well? Financial, business finance, which is coming under the financial analysis discipline. So therefore, there are 4 subjects up to the 4th year, first semester. You are starting with the financial mathematics. So then the year 1, semester 2, you have the SAT as well. So then the year 2, semester 1, you have the business finance, which is developing under the financial analysis, same pillar. So therefore, these are interrelated subjects. You should have the understanding regarding the financial mathematics, and then the other one, statistics as well. Last year, 4th year, first semester, you have the corporate finance and the risk management, which is coming under the same pillar. And then when you are going to the whatever they call the specialization, you have the security analysis as well as the financial modeling and forecasting for the this are coming under the financial analysis, the main pillar. Right. Okay. So you all know, you all have the continuous assignment plus the end semester examinations. Here, continuous assignments, we are giving the 40 marks for the continuous assignments, and the end semester, how many marks? 60 marks. So therefore, 60, 40 is the course coverage. Regarding this 40, so you have the group report, and then the group presentation, and then the individual assignment, right? Group presentation, you are getting 10 marks. Group assignment, that means group report, you are getting 10 marks entirely. For the group presentations, the group work, you are getting 20 marks. Plus, for the individual work, you are getting 20 marks, right? So this is the individual quiz, right? So then I will be releasing the information regarding the group assignment from the third week onwards. Your deadline is 14th week regarding the group assignment. So therefore, you have to work on it. I'm not going to pressurize. I'm not going to again call your memorize. I'm not going to ask about the each and every week. How about the progress of the group assignments? I will be releasing the information on 4th week. You have to complete it the 14th week and present. Right. Regarding the quiz, right? So you have the. So this is our session plan. How we are going to finish our course content during these 15 weeks, right? So the presentation has been uploaded to the LMS already. If you want, you can read. First week, lesson number 1. Likewise, we have financial introduction to the finance, and then we have the financial markers. Second lesson, cost of capital, the time value of money. Third lesson and fourth lesson, bond valuation and share valuation, security valuation. The next lesson, risk and management, risk and return, 2 weeks, plus the bond valuation also we are looking 2 weeks, and then once after complete with the risk and return, we are going with the cost of capital, and then the capital budgeting decisions, capital structure decisions. Yeah, other one, you call the dividend policy. After the dividend policy, you are getting the presentation for the 14th week. Once we complete the 14th week presentation, we are coming to the last week paper discussion on the derivative discussion 15th week. Regarding these quizzes, right? You can see here how many quizzes are there. 12 quizzes are there. Right? So that means at the end of the each and every day, you are getting a quiz. Right? At the end of the class, you are getting a quiz, 2 questions for 5 minutes. So then you can earn the 12 marks, but I'm taking 10 marks. So therefore, you have the chance to miss 2 quizzes. Is that clear? Each and every week, you are getting the quizzes. Right? So then we have how many quizzes? Until the dividend policy, we have 12 quizzes. Each quiz carries 2 marks. So then, entirely if you are participating for the 12 quizzes, you have the chance to get the 24, right? But I am taking highest mark for the 10 questions. So then you can reach for the 20 marks. So that is how we can come up with this 20 marks allocation for the group presentation. ලකුණු 2යි ප්‍රශ්න 2යි විනාඩි 5යි නම් lesson එකක් ඉවර වුණාම chance එක තියෙනවා කීයක් මිස් කරන්නද? Yes, දෙකක් මිස් වෙන්න පුළුවන්. Right. Okay. So these are the recommended readings. You can refer the recommended readings. I'm referring other Pandey's, IM Pandey's financial management book. Each and every week I will be uploading the chapter summary or a chapter PDF to the LMS as the additional reading. You can refer and come, right? So for the next week, I'm doing the financial markup. So then you can refer the lecture note and come. Additionally, you can refer the recommended reading and come to the class. So then it will be worthwhile to study. So this is the university level class. You are now in the second semester. Then I will upload the recommended readings. You can refer and come. Thank you very much. That's more thing, right? Since you are growing up now. So I hope you have experience with the first year onwards. Now you have developed yourself up to some extent regarding the university curricular activities as well. So therefore, always when you are taking decision as a lecturer, this is my first advice for you. When you are taking the decisions, you all are going to become the accountants. You all are going to be the accountants. So therefore, most of the students are very rational. I hope it. So therefore, when you are taking the rational decision, always try to leave your heart as well. So therefore, when you are taking the decisions, please be very rational. Plus, you have to think it from heart also. Therefore, this is my the advice for you all to as the first lesson. Right, that's it. So regarding the examination, so I will be uploading all the past papers. I will not be able to provide the answers for the entire past papers, but for very clear, recent past paper from the business finance with the marking scheme, allocation, all the things will be provided under the elements. Right? So therefore, if you have the chance, if you I hope you have the access for the past papers as well. Okay. So once I complete the lesson, you go to the lesson, you go to the past papers and that is the way how you can develop yourself for the ready for your examination. Right. So we start introduction session to the financial management or the business finance. Fortunately, I don't have the slide over today. Right. So what we are going to cover goals and objectives of the financial management and then the role of the finance manager and the key decisions that we are taking in the financial management. Right. So therefore, goals and objectives and then again the role of the finance manager, main decisions and then the last one agency theory plus the stakeholder theory. Right. I will give the chance to read this page. Look at the pictures here, right? So this is the financial manager, right? Financial manager. So there are some images, right? By looking at the images, try to understand the images and then link these images with the finance manager with the arrows. Right? And name the arrows. How these arrows are linked with the given accountant or the financial manager and the given images. I will give the finance. So let's assume this is the finance manager, middle finance manager. So there are some images. By looking at these images, try to understand the images. And then identify how these images are linked with the accountant and make the arrows from the images to the accountant or sorry, the finance manager. Name the arrow with the usefulness of that information or the usefulness of that image to the accountant or the finance manager. This is the finance manager, right? You were given the information or the images, right? Link finance manager and the images with the arrow and name that arrow. How useful that given image or is the duty of that given image is the finance manager. First, you can copy this one to your books. You can't draw this thing. What you can do is you can name it. Just try to understand the given info, how this given information, given the images are contributed to the finance manager. So we start. This is the financial manager. F, F, right? Financial manager. Right. So we'll start with here. So what is this? Can you guess? Yes? Business. Exactly. It is for the business operations. Business operations. What is this for? Yes. People are doing the activities. What are the business operations? Tell me, what are the business operations? HR, what else? Marketing, very good. Production, what else? Research and development. Finance. The financial activities, okay. Accounting and etc. What else? Administration activities and etc. So therefore, this is not for the HR. I don't know whether it is very clear to you. Understand? One of activity business operation. Right. So this is, it's clear. This is investments. Investments. And then income and expenses. Right. So what these are altogether, what these are? Yes. What these are? Or else what is this side? Huh? Internal side. Okay, internal. Good. What else? Internal. What else? Finance manager. But these are internal activities or else the organizational functions. In organizational functions. Organizational functions. companies do have the income and expenses. They have to go with the investment. So they have to bear the operations. They have to engage with the business operations and likewise. So then it's okay, internal side and organizational functions. What is this? Colombo Stock Exchange, CSC. Bank, leasing, which denote the leasing industry. And what is this? Insurance activities, or it's the insurance organizations. Insurance organizations. Now tell me, this is the identified task. We identified the given images. Now tell me how the finance manager can deal with these items. Exactly, he or she have to manage these internal operations. Right? When he is managing these internal operations, what he need? He need to manage these all operations. What he need or she need? Information, okay. Information plus when he is enacting these activities, when he is engaging these activities to run the business operations very effectively and efficiently, what he need? Exactly. Sales, okay. Skills, okay. To run the activities, he has now good skills. So then, and then the information also. With that, decision making capacity, okay. What else? Financial strength. Right? That means we need one. The finance manager need one. Finance. Then the money. With the skills as well. Now he need funds. He need funds. Right? Or else he needs some requirements to run the business operations. Right? How he can acquire the funds? He go to the bank and then request a loan. Request a loan. And then from the bank side, they are giving us the money, or is the bank loan. From the leasing, we need now a vehicle. To run the business operations, we need a vehicle. What we can do? We can go to the leasing company. We means the manager can go to the leasing company and then require or request a leasing, and then they will give us the request a leasing, and then they will give us the vehicle. Insurance. Now we need to secure our stock. Okay. What we can do? We can go to the insurance company and have a policy on that one. So therefore, we go to the company and we request an investment policy. The insurance policy, and they will provide us an insurance. Right. Okay. So then, Colombo Stock Exchange. Colombo Stock Exchange. How it impacts the finance manager? Yes. If the company needs to acquire another company share, they have to go to the PLC shares. So then they need to go to the Colombo Stock Exchange and then make the investment. Plus the other way around also, if the company need to raise their capital, what they can do? They can go to the Colombo Stock Exchange and then they can issue the share if it is a PLC. Now we are discussing about the PLC's financial management activities. So then we have the chance to raise our capital here, and plus we have the chance to make the investment as well. Right, investment. So this is how this given information or is the images are link with this financial manager, right? So then we'll come up with the, shall I erase this one? Shall I? මම කියනකොට ලියා ගන්න. මම ආපහු ලියා ගන්න වෙලාවක් දෙන්න නෑ. Right. When the finance manager dealing with the banks, we can call them as banking activities. Banking activities. When he's dealing with the leasing companies, what those are? Leasing activities. Insurance activities. Right. Plus with the Colombo Stock Exchange, so they are dealing with the investments. So then, finance manager rather than the accountant. What is the accountant role? He is here, then he is doing the accounting part only. Calculations, calculating income, and then the making the profit, gross profit, and the preparing the financial statement. Right? He is here, just a one operation. Right? Financial statements and etc. Right. Now, as the finance manager, he is dealing with the investments and then the, what is the other one? Insurance activities, banking activities. Especially, we can name this as the, we'll come up with the financial markets. We'll identify financial markets. When he is dealing with this investment, Colombo Stock Exchange is the secondary market. Right? So we have primary market and secondary market. And then you have the, what is the other one? What do you call the primary market and the secondary market and the capital market and the money markets? So those are the broader terms of the financial market. So then the one of the main platform which provides the platform, one of the main platform to the secondary market is what? Yes, the CSE. So therefore, we can broadly identify this as a dealing with the financial markets. Dealing with the financial markets. Finance manager dealing with the financial markets and the banking activities, insurance activities, and the leasing activities. For what? To require to, for what? To acquire the not funds, we call it as a financial resources. Financial resources. Right? Under that one, mainly financial assets. Financial assets. Cash. Financial assets. So you're dealing with these parties to acquire the mainly financial resources in narrow down in financial assets to operate the business activities. Right? So this is what we call as a, what is this? Can you name this one? Broadly, can you name this one? What is this? Yes? Role of finance. Okay, good. This is financial management. This is financial management. What we are doing at the right now. Okay. I just summarize it. Now, what do you mean by the finance management? Yes, the purpose of the process of how the money is managed and then the actual process of acquiring the needed funds, right? So how we can acquire the needed funds in the form of banking. Leverage means, what do you mean by leverage? Leverage. Leverage. Do that quick. What do you mean by leverage? Financial leverage, operating leverage. No idea. Just managing the, what is it? Leverage. The management of the different affiliates that you heard it before. Leverage, we have a lesson for the capital, but the capital structure decisions we discussed broadly regarding the leverage, banking, leverage, credit, and then the system of money, finance market, and then the investment and the financial instrument. So this is what we call as the finance. Right. So it becomes art and science. Are you agree with that term? Finance is an art and science. Are you agreed with that? Yes or no? Yes. How? We have a lot of calculations. Okay? When we are acquiring the lease, when we are acquiring the bank loan, we do have a lot of calculations. So therefore, definitely, exactly, it's a science. How it becomes the art? Yes, how it becomes the art? How? The management of the funds is the role of a art. He should have the, as you said very correctly, when he's dealing with activities with the other outsiders, when they are managing these business operations with the financial resources, they should have a art skills or it's the management skills there. So therefore, we call it as a finance. It's not only a science, it's an art also. Right. Financial management deal with the managing the financial resources. What are the financial resources? So write down the example for the financial resources now. Financial resources. Companies, they have the financial resources. Managing these financial resources also called as the financial management. Financial management. What are the financial resources? Financial resources. Yes. Financial resources. You mean by the financial resources, the way how the companies are trying to acquire the funds. Right? So what are the forms? Yes. Cash, exactly. What else? Cash, equivalent, good. What else? Stocks, that means shares, okay. What else? Bank deposits, bank overdraft, what else? Have you heard the bonds? treasury bills, treasury bonds, right? So those are also financial resources. Trade receivables, that financial resource. Yes, exactly. Okay. Financial resource. Trade receivables also financial resource. Trade payables, receivables, bonds. So those are what? Debentures. Debentures. So those are the financial resources. Financial resources. Managing these resources also called as the financial management. So we have some specific financial decisions, right? So we have 4 decisions, dividend decisions, we discuss in detail, and then the working capital management decision, and then the capital budgeting decision, and the other one, capital structure decisions. Mainly managing these 4 activities, 4 decisions in every businesses, we call it as a business finance. Business finance. Corporate finance is what do you mean by the corporate finance? Managing these all activities in where only the corporations. In the corporation. So therefore business finance deal with the all the companies, and then the corporate finance, it is the management of the financial activities only within the corporations. Right. Basic areas in finance. How many areas? How many basic areas do we have? We are going to identify the, yes, how many? 6. What those 6? 6, 7. 7. What are the 7 basic areas in finance? The first one is, what is the first one? Corporate finance, and then the investments, and then the financial institutes, and then the international finance, public finance, entrepreneurial finance, and the personal finance. Okay. So we start with the investments, right? Investments. What do you mean by an investment? Investment. Okay. Investments. Do you have investments? What you are doing here at that campus? Exactly. Still writing. Oh, yes, you have that. You are wasting your money. I'm investing. Exactly. Next, what is this? The following a degree program with making a, it's an investment for what? What's the benefit that you can gain? What you are doing? You are sacrificing the money. 175,000 for the each and every semester. Am I right? 175 is 60, 50, 150 for each and every semester. What is that? You have the current outflow. Right? Plus, once after you complete this one, you are expecting something. What is that? Future benefit. It may be the for the came for the gaming, came for the game money. It may be to find a job. Right? So what is that? That's the investment. Right? What is that? Future benefit. So then for the regular person, I can't remember your yes. for the day to get promoted. Once after you complete this degree, you can promote it to the next level. What is that? That is the future benefit that we can get. So therefore, SAT campus following the degree also what is it? It's an investment. What you are doing? You are sacrificing the funds, current funds, for what? In the expectation of future benefits. Future benefits. Right. Exactly. Allocating the resources to acquire the assets for the future return or benefits. Companies invest in both financial assets and then the physical assets. What do you mean by assets? What are the assets that you know? Current assets and the non-current assets. Which is coming under which kind of assets? Physical assets broadly. Assets can be divided into broadly financial assets and the other one physical assets, right? So as you know, current assets, non-current assets, all of those are coming under the which assets? Physical assets. So then, financial assets. What do you mean by the financial assets? Previously, we discussed the financial resources and then now the financial assets. What do you mean by financial assets? Physical assets. What do you mean by physical assets? Asset which has a physical existence, right? So then financial assets. What's their pattern? Yes. What is it? Financial assets. A cash, good. Example. What else? Financial assets. In we are trying to paint it. We need financial assets. What are the financial? Okay, search and everything. What do you mean by the financial assets? Hold on, the radius no. Which is after 2000. Financial assets. Financial assets, right? Financial assets have the right to request the cash or cash equivalent or cash similar things from the other party, right? Financial assets, they have the capacity to acquire or else request the money or cash equivalents from the outsiders, right? Third party. Right? Examples, cash. Right? Cash. So then what is cash equivalent? That means short term. You go to the bank and deposit the money for 3 months. So then you have the right request that 3 months deposit after the 3 months. So therefore, cash and equivalent, and then trade receivables, and then the investment in the shares, right? Investment in the shares of the other company, investment in the bonds in the other company are the financial assets, which is coming under broadly the financial resources, right? Short-term financial resources and then the financial assets subset. Okay, so therefore companies, they do have the chance to invest in the financial assets as well as the other one, non-financial assets coming under the physical assets. So then when they are doing this investment, what they need to consider, risk and return. Always the heart of the financial management is risk and return. When we are taking the decisions, we have to consider the risk versus return as the rational investor. Right. Okay. Do it quickly. How many banks in Sri Lanka are? How many finance company and how many insurance companies? How many banks? Okay. 24. Banks. 24. Are you agree with that? Banks. 30 banks. 30 banks. Okay. 20 increase up to 30. Good. How many? 22. 24. How many finance companies? 24. 30. 34. How many insurance companies? 6. 6. Insurance companies? 30. From where you can find these details? What you refer? Just ChatGPT or the whatever the AI platform. Huh? Google. Okay. The trustworthy or else accurate the resource is what? CBSL website. Right? CBSL website. It identifies the all these facts and figures. Right? So anyone you didn't tell me the banks can be divided into two. What those are? License commercials bank and then the license specialization bank. Right? How many license commercial banks? 24. How many specialization banks? 6 specialization banks. Altogether 30 companies. So therefore these two answers are correct. Right? Okay, finance companies 34 and then the insurance companies, how many insurance companies? 28, 26, 28. Right. You can note down the things. Okay, we just discussed about the financial institutes. That is the second component. So what is the financial institutes, right? Financial institutes, what's their role, right? So they transfer the money from the deficit money units to the excess money unit. So therefore, we can identify it as it's an intermediary, right? The banks, finance companies, and then the leasing companies, right? So what's their role? They are an intermediary person in between the, yes, exactly, businesses to the savers or the lenders to the borrowers, right? So what they are doing is they make the transfer of the funds. They are taking the money from the savers or as the excess money units or as the lenders, and then they take the money and then they are going to transfer the money to where? To the deficit money unit or as the borrowers, right? So therefore, the financial institutes, what is their role? Intermediary. Right. So as the finance manager, you have to always deal with the financial markets. How these financial markets are engaged with these financial institutes. financial markets and the financial institutes. So what is the relationship? What's the relationship? Financial institutes, so they have to go to the financial markets and then they have to fit their activities. Otherwise, they can't issue the shares, they can't issue the bonds, they can't issue the loans. So therefore, we are identifying the financial institutes play their role in the financial market. Financial market. Right. So the international finance. What do you mean by international? Sorry. International. International. What is it? Yes. If you are dealing with 2 or more countries, sorry. If you are dealing with the 2 or more countries, we are calling it as we are dealing with some international activities. But here the international finance, what is it? Study of the money interaction in 2 or more countries. So we have to deal with the, for example, you have to invest in the whatever they call the convention like the stock exchange. What is that? Exactly, it's the involvement of the financial market to the other company. Or else sometimes you have the chance to borrow the money from the other company. It's a multinational company. What is it? International finance. So when we are dealing, sometimes we have to purchase the items from the international company. So therefore, study of the money related activities with the 2 or more countries by the corporations, especially the corporations, we are calling it as a international finance. Exactly when we are dealing with this financial or monetary activities, so they have to deal with what? Foreign exchange rate. In the foreign exchange rate, have identified that one to discuss all the principles of economics. Exchange rates are there. So therefore, as the finance manager, when you are dealing with these international companies, multinational companies, you have to very much concern on the exchange rate. So what is exchange rate today? This exchange rate 298. Otherwise. Okay, exactly. When we are dealing with the other countries with the foreign exchange rate, so we have to identify the foreign exchange rate risk. Why? So have you heard the hedging strategies? Have you heard the hedging strategies? Hedging strategies are nothing other. So we agreed with the other company or the multinational companies, okay, you provide something, even the price changes, we deal with the fixed price like this. Right? So then once after we have the agreement, so we have to pay them the money back. So then when we are paying the back, so we have the good example, I will explain that one later on. So when we are paying back money, so we have to pay the constant rate that we have already agreed in the 3 months or whatever the period. But in Sri Lanka, we have the hedging strategy for the oil consumption. With the other country, I can't remember that name, in the Mahindra. Right? So then, so they agreed with the hedging, they maintain the hedging strategy for the oil prices, but unfortunately, what happened in that when we are agreeing the hedging agreement, so there the fuel prices, world pricing is going up, but unfortunately after 3 months back, so the fuel price going down and decreases. So then even we have agreed to the highest price, we have to pay that highest price without considering the lowest price at the payment date. Therefore, hedging strategy. So therefore, what happened? Previously, we agreed the 100 rupees, right? When the fuel prices increases, but later on after 3 months period, we have to pay 100, even the price is 50. So what's that? It's a risk. We have to hit one prices the exam. After agreement, they are going to have a master one. Can I put that? Even if we get from under price down. අපිට ගෙවන්න සිද්ධ වුණා හැබැයි කියන්නේ ඒ agreement එකේ ප්‍රකාශ ගෙවන්න සිද්ධ වුණා. So what is that? That's the risk. So therefore, sometimes it may be the definite as well. So even the price is increasing more and more, we have to again only pay the 100 rupees. So therefore, when we are dealing with the international companies, multinational companies, especially the monetary interaction, so we have to concern about the exchange risk as well. Public finance. Public finance. What do you mean by the public finance? Public for public. Public for public. We also get the public. Then who are dealing with this public finance? Government. So what is their role? So the Sri Lankan government, they have some roles. So they have to contribute to national development, growth, and like busting and unemployment, inflation, all the things. They have government. From the government perspective, they have to manage these activities. Manage these government activities. What they need finance. Otherwise, how they can pay the salaries for the government. So let's say the government, the employees, how they can get the salaries to the government, employees without the funds. So they need funds for the projects, what they need. They need funds. So likewise to maintain the road and etc. What they need. They need funds. So therefore, the public or the government also needs funds. Need funds for the country's development activities. So therefore, we are identifying public finance is the approach to managing the public funds in the country's economy, especially development and growth of the nation, both domestically or sometimes it may be the internationally also. But how the companies, how the government can acquire funds? Exactly, very good. Taxes, direct taxes as well as the indirect taxes, plus they have the investment in the other countries as well. With that project get their gains, so they are going to have the funds. Personal finance. Personal finance. Personal finance. How much are you getting to take for expenses from your parents? Yeah, that's that. Okay, how much are you getting? 500. Okay. 500. Good. 500. So you are getting 500 today, and then at the end of the day, you should be able to manage the 500, especially keep the 100 as the saving. The 100 as saving. If it is so, I will then personal finance. If not, you are bad at personal finance. Therefore, managing the own funds. In managing own funds is called as the personal finance. Not only the your level, you should have only the expenses and income. You are getting fund from parents. Some of you are doing the jobs as well. Okay. So then you are just having the expenses and income. But when you are growing, so you may have the savings and then you may have the investment in the other companies as well. You may invest in the other projects. You may have some insurance schemes. You are paying for some insurance schemes. And likewise, retirement plan. So you have to pay the taxes, and then you have the state planning, investment, insurance, credit cards. Likewise, you are going to involve in a competitive environment once you are growing up. So therefore, you should be able to manage your finance. Otherwise, you can't reach your goals. So therefore, please be good at the personal finance. All the financial decisions and activities of an individual plus it's very important, not only the individuals, the household as well. So therefore, it is called as the personal finance. Entrepreneurial finance, the last component. Entrepreneurial finance. What do you mean by entrepreneurial? Entrepreneurial. Anyone who is doing your own business? Anyone who is doing your own business? Own business? No. No entrepreneurs here. Own businesses. So we can take the example for the entrepreneurial finance from Delhi. Delhi. No, no business. Right, okay. Right. Very good. So we can appreciate him. The entrepreneurial finance. If you are doing your own business, so that's a good. You start. If you are not doing your own business, start your own business now. Right? That's a good approach. Anyway, entrepreneurial finance. So managing the finance of the new ventures. I have given you the description there, right? The entrepreneurial finance means managing the funds or the financial resources of the entrepreneurs, right? Entrepreneurial ventures. Managing the financial resources of the entrepreneurs or the entrepreneurial ventures. We are calling it as an entrepreneurial financial resources where we are managing it with the new ventures. Example. So it's the trending topic now, entrepreneurial finance. Then have some angel investors, right? And then venture capital organizations as the examples. Venture capitals and then the other one, angel investors, right? Angel investors. Who are the angel investors? Angel investors. They are going to invest in the new business, right? So they are going to give the money for the new entrepreneurs without again expecting the right for that. Right? They are just usually is providing the advisors for that development of the business. I mean, therefore, management of that is called as the entrepreneur. Venture capital reflect. Yeah, the example venture capital. Venture capital reflecting. So there are some investors who are giving the funds for the new beginners with the expectation of right to receive the entitlement of that company. Right? So they are giving the funds, venture capital. So they are giving the funds for the new ventures with the expectation of having the right of that organization, that is equity. So then the venture capital, that is called as a venture capital. Angel investors, so they are not bad, they are investing. In return, they are not expecting something back. Plus, continuously they are monitoring their business with the providing the guidance as well. So we'll discuss the role of the finance once after we have the 15 minutes break.
Business finance එකෙන් capacity එක තමයි. කරලා දැන් තියෙනවා. August election තියෙනවා කොහොමද දන්නවා? ඒක මොනවද?
Start. Ask your friends to come. Okay, we can start. So we'll move to the role of the finance manager, right? The next task is identify what is the role of the finance manager. The main role is he is going to have the funds from the fund providers and then utilize the funds in the business operations. Right. Okay. The thing is, from where he can get the funds, right? From where he can get the funds from the financial markets, right? Financial market. So therefore, financial market, finance manager play the role between the financial market and the business operations. So as we discussed previously, the main task is getting the funds from the financial institutes which are acting in the financial markets and then transferring that funds into the business operation. So that's the task. Again, finance manager is going to acquire the funds in the financial institutes, whereas situated in the financial markets, and then he is going to utilize that funds in where? In the business operations. Salligatta business, right? Okay. The first one, right? So therefore, the first task is he need to acquire the funds, right? He need to acquire the funds from where? From the financial markets, right? That's the first activity, right? Okay. So once after he acquire the funds, the second task is utilizing that funds in where? In the business operations and then engage with the business operations, right? So therefore, second one, utilizing that funds in the business operations. Third one, right? Now we acquire the funds and utilize that funds in the business operations. Now he is getting what? He's running the trade receivables and trade payables very well, right? He is managing those things. He is paying the expenses very well. He is earning the income, right? So then now the business operations are now going on very smoothly. Now what he can get? Now he may have some profit. Very good. He may have some benefits, especially the profit, right? So once after he had the profit, what's the next step? Now generating the funds, generating the cash to the business. He is utilizing the funds in business operations and then in back he is generating the cash to the business. So then once after he generated the business, what's the first step? He need to pay the funds to whom? The fund providers, right? He acquired the funds from the financial institutes, or else it may be some shareholders, it may be the bank loan providers, likewise. So therefore, especially he needs to, this is regarding the dividends. So then once after he acquire the funds, mainly via the shareholders, he need to satisfy the shareholders by giving something. Then we are calling it as a dividend. Therefore, we need to distribute the part of the earned profit to the existing shareholders. Right. So then, so this is 4B. Part of the profit should be again shared to the financial market, in the sense the financial institutes or the shareholders. The other one, what is that? Right? So if the existing funds are there, what he can do? Now he already distributes something to the outsiders as well, or the shareholders. Now if something remains, what he can do? Exactly, he can invest in the again financial markets, or but if he has extra funds, now they can buy a share of the other company. Or else it may be the investment in the building. We can acquire the building. Right? It's there. Therefore, if the existing funds are available, he has the two options. So what is the first option? We need to distribute the funds for the existing shareholders in the form of dividend, and then if there are something remaining again, what he can do? Invest in the financial assets, or the other one, real assets in the financial market. Okay. First activity again,
cash raised from the investors, and then cash invested in the business operations, and then third one, cash generated from by the operations, and then 4.1, cash reinvested, and then the 4B, cash returned to the investors in the form of dividend. Here the investment of the cash via the new projects. Right. Okay. So with inline to that 4 activities, we have 4 main divisions in the finance management. Right. In line with this 4 activities, we have 4 decisions. We can call them as the working capital management decision, the capital working decisions, or the capital structure decisions, or financing decision, and then the other one, dividend decision, and the last one, what is it? Yes, what is it? Capital budgeting or the investment decision. We'll start. Right. Financing decision. In line with the role of the finance manager, we are going to discuss this for the decisions, right? First decision is what is in financing decision, or else the same name is capital structure decision, capital structure or the financing decision, right? So financing decision reflecting acquiring the funds from the financial institutes, which is in the financial market, in the form of okay. Okay. We already discussed about the role of the finance manager, right? So just to identify it, now look at the board. Financial manager deal with the financial markets and the business operations. So therefore, he has 4 activities. First one is raising the funds, and second one utilizing the funds, and third one generating the funds from the business operation, and the last one, sorry, the 4 decisions, we have 2 sections: reinvestment in the business activities and the sharing the profit to the existing shareholders. Right. So therefore, 4 activities they have. With in line to the 4 activities, we have the 4 decisions. Now we are discussing about the 4 decisions. Right. First decision is the financing decision or the capital structure decision. The first task is taking the funds from the financial institutes, which is in the financial market. It may be either form of debt or equity. Right? If the company needs the funds, they can issue the shares as well. What is the format? That's a equity. Right? If the company needs funds, what they can do, they can go to the bank and request a loan. What's the format? That's a debt. So therefore, sometimes the company has a chance to issue the bonds. Right? Company issue the bonds and take the funds to the organization, again in the form of debt. So therefore, they need to identify, as the finance manager, you need to identify first, if I require the funds, so what is the method that I'm going to use to acquire these funds? Either debt or equity, which is identified under the capital structure decision, capital structure. Debt and equity, which determine the capital structure of the company. So therefore, the similar name is capital structure, and the other one, financing decision. Right. Second one, utilizing the business, utilizing the acquired funds in the business operations. Right. What are the business operations? What are the business operations? Business operations, HR, production, and then marketing, and the other one, the admin and other one also. right? So when he is acquiring these funds and when he is utilizing these funds, have you heard the trade receivables and other non-trade receivables? They have the finance manager need to manage trade receivables, short-term loan, short-term liabilities, right? And then the other one, short-term assets, trade payables, suppliers, right? And overdraft. We need to manage those things. These current assets and the current liabilities directly engage with the business operations, where we call it as a working capital management decision. Right. So what is mean by working capital management decision? Management of the current assets and the current liabilities of the organization. Right? Especially trade receivables management and the trade payables management and the other one cash management. Three components. Now, okay, he utilized the funds in the business operation and generated the cash. Now, the last one, fourth step, now he needs to distribute this earned profit among existing shareholders, right? In the form of dividend. In the form of dividend. So, therefore, we call it as a dividend decision, right? Dividend decision to the existing shareholders. And the last one, if something remaining, once after we distributed the dividend to the existing shareholders, company has the chance to invest in where? Investing in the either physical assets or the financial assets. So therefore, it is called as the investment decision and the capital, not structure. What is it? Capital budgeting decisions. You may heard that one in the cost and management accounting. Calculation of NPV, calculation of IRR, AR, and likewise, we are going to apply those things before we are going to invest in specific project. So therefore, the investment decision or the capital budgeting decisions. Okay. So these are the explanation regarding the four decisions: finance decision, investment, financing, dividend, and the working capital management, the organization. Right. Quickly do the activity. What you need to identify is here you have been given some decisions, right? You have the 6 decisions. Categorize these 6 decisions into the main 4 decisions. We have 4 decisions. You have given 6 scenarios. Categorize these 4 decisions into 6 decisions into 4 categories. Read the given activity and identify whether it is a dividend, whether it is a working capital management, whether it is an investment or the capital structure decision. Can you see this one? If not, you can go to the LMS and refer the handout. Last note, if you can't see that one, you can go to the LMS handout. So don't worry, we will pick this one. Okay. The first one. Nokia PLC, they have issued the 10,000 shares to the market at a price of 100. Issuing the share. What is? Issuing the shares. Financing, financing decision or the capital structure decision. Okay, there the next one, company decided to introduce a new computer system. What is it? Yes. Investment decision. Investment in where? Investment in the physical resources or in the physical assets. Right. Maintaining an inventory level worth of 100,000. What is it? Inventory. What is it? Working capital management decision. Daily operations. Management of the inventory. Right. Third one, dividend declaration. 1 rupee dividend declaration. Dividend decision. Dividend decision. So then, fifth one, company expand the business by entering to the new market. What is it? Exactly. What is it? Investment decision. Investment decision. The last one, extended to the credit policy by the partner, respective the finance by 60 days. What is it? Working capital management decision. Right. So now we identify where the finance manager can play. Where we can place the finance manager. So again, the head person of financial management is what? Who is that? CFO, Chief Financial Officer. After there, started accountant. Right? And then under the supervision of the CFO, the finance division, there may be a finance manager. So then finance manager is playing two duties. The first one is treasurer duties as well as the controller duties. As the treasurer duties, he is managing the cash management, credit management, raising the capital and the bank relation. As the controller, cost and financial cost and management activities, tax, MIS and the accounting activities. So therefore, you can identify accountant is not a finance manager. Accountant's role is very specified, very narrowed down area, right? We compare to the finance manager. The bigger person is the finance manager who is looking at overall financial management within the organization. Accountant's role is just preparing the financial, preparing those things to the stakeholders for their decision making. Right. So to identify the finance manager's role, you can watch these two videos. I don't have the time, so therefore do it as a homework. Right. The next one. So we'll identify how this finance management comes to the current context. Right. So we can identify the two eras. So before the 1950s and then after the 1950s. Right. So therefore before and after. So in the next, we are initiating this financial concept. We initiated it long time ago. So before 1950s, we identified it as a traditional approach of the financial management. Later on, we identified after 1950s, we are come up with the modern approach of the financial management. So what is the difference? Traditionally, the traditional approach, they are concerning on the finance in the 1954. So we just identified the financial management is only the maximizing the profit of the company. Right? How you can divide the profit? Income minus expenses. Right? In the traditional approach, it identified as the financial manager's role is only the maximizing the profit. Plus, what his main role is, the financial manager identified just his focus on the long-term financial problems, ignoring the importance of the working capital management. He just consider about the acquiring funds only. How the companies can acquire the fund. That means the first decision, what is it? Capital structure decision.
how the companies acquire the funds and then how companies increase their profit. So that is the traditional approach concern. Therefore, we can call it as a, yes, exactly, outside looking approach, right? So how the companies acquire the fund, that means they are just looking at the outside approach. Later on, it identified that is not only the finance manager's role, it involves broader than the maximizing the profit, the wealth maximization of the shareholders. Right? What do you mean by wealth maximization? Wealth, have you heard it? So, we discuss wealth maximization. When the companies are doing this wealth maximization as their main goal, they have to focus on, yes, not only the acquiring the funds, they have to concern on the how the companies manage these funds within the business. Therefore, they just identified management of the company's daily operations under the working capital management decision and generated funds, and then reallocation of these identified funds in the form of dividend plus the reinvestment as the broader context of the role of the financial manager. So therefore, it is identified as the inside as well as the outside looking at. Outside means how the companies acquire the funds, that is outside looking. Inside meaning, what do you mean by inside? How the companies utilize these acquired funds, the business operations, and how they can generate the profit. So therefore, inside and outside looking approach after the 1950s with the consideration of the four decisions. Traditional approach, they consider only one decision, and the modern approach, they consider the four decisions. And then their main perception is to increase the wealth of the shareholders. Right. So before moving to wealth maximization, we just identified what do you mean by a wealth and income. Are these terms are similar terms? No. Right? Income and the wealth is two different perspectives, but those are financial indicators for a person, for its organization. That means financial metrics that we are using to measure the capacity of the organization or the individuals. What do you mean by income? Do you have income? Do you have income? Exactly. Your exactly salary. That is your income. Right? Plus, you have wealth. Yes, you may have wealth. Let's take the person Leo. Leo, he has a 1 million salary. Okay, 1 million salary. What is it? That's the income. So then he has a out 7 million. Okay. So then after a market, you know, whole lot. After a market, you know, again 2 million. Right? After that, you know, no really. ඒක එක්කම තේයක් සවදාහයක් තියෙනවා. එතන ඔක්කොම ගත්තාම 15 million ඉන්න තියෙනවා. Views. From their parents. Right? Plus he is getting the salary, 1 million salary for 1 month. Can you differentiate the wealth and income? Exactly. 1 million salary is the income. And then wealth is 15 million. So therefore, by looking at his financial capability, we can measure him by using the income as well as the wealth. එහාදියා බලන්න පුළුවන් wealth සහ income එක wealth and income එක කියන concepts දෙකම අරගෙන. Therefore, normally we are identifying a person as a person who is having a well financial stability. How we can measure that one? If the person can live without 6 months without any income, right? If person can live without any income for a 6 months period, is a financially stable person, right? Salary අකට මාස 6ක් කිසිම ප්‍රශ්නයක් නැතුව ඉන්න පුළුවන් නම් අන්න එයා
financially stable. I mean, so okay. So then a person can have the high income but low wealth if it is so, if they spend more of their earnings and savings little. Plus, if the person can have a low income but have a high wealth, if they are going to have the larger sum of money or own valuable assets as they appreciate over time. Right. So now we'll go to the goal of the financial management. Main goal, even the profit maximization is given to us. The main goal of the financial management is what? Wealth maximization. Shareholders' wealth maximization is the main objective or its main goal of the financial management under the traditional, under the modern approach. Right. Profit, you can calculate income minus expenses, that is, yes. Profit maximization, income minus expenses. By increasing the income or else by decreasing the expenses, you can go to the maximization of profit. But shareholders' wealth maximization totally different than the profit maximization. It's a broader concept than the profit maximization. We'll identify what do you mean by the shareholders' wealth maximization. Okay. Before moving to that one, answer for this question quickly.
Profitability. Yeah, we net profit. But it's exactly financial performance. This is like the image. So we are thinking about what are the factors when we are going to invest in and this is not the duty. Exactly. Liability. They want to pay. They want Right. Okay. Only financial performance and the liabilities. Let's assume you are going to invest in the Sampath Bank. What are you looking for? Sorry. You are going to invest for a bank in industry. Right? So now you have to identify the company or it's the organization, bank that you are going to invest for. Only first thing that you are going to look at the performance and then the financial performance, profitability. What else? Only the profitability? No, stability. Good. What else? Only the profit? Yes, we can apply the going concern in broadly by looking at the assets. Okay? By looking at the assets, very good. We are looking at the assets, current assets and the current liabilities, and we are going to have the concern regarding stability by concerning about the going concern. Okay, what else? Current assets and the current liabilities. Aren't you looking for the investments there? What's their investment? Yes, you are going to look at the investment of that company. So how many of investment that they do have for the next years at the current context. Aren't you looking at the future plans of that organizations? You are looking at the future plans. So they have to declare the future plans in the annual reports. But is that all? That all? Debt component, very good. Debt component. Okay? Equity component and the debt component. Debt and the equity component. How much of dividend that you are going to have for this share, right? Okay, so these are some broad concepts that we are looking for when we are going to invest in a business. Invest in a business, especially shares. Now, shareholders' wealth maximization. Shareholders' wealth reflecting the market price of a share, right? Shareholders' wealth maximization or shareholders' wealth can be calculated by multiplying the number of shares with their market price of a share, market price of a value, right? So market price, what do you mean by the market price? Trading price. It may be similar to the trading price as well, right? So sometimes what happens if the company's dividend policies, if the company's capital structure and the capital structure, their plans, investment are going well with the profitability. So we have the high bargaining power for the company's share. Right? So then if there is a high bargaining power for the company share, what happened to the market price of a share? Decrease or increase? Increase. If you all are going to, if you are all going to invest for a Sampath Bank share, what happened to the market price? then it increases. But because of the some, they don't have the profitability. They are not going to declare the dividend. Okay? They have the high debt. They have the low equity. Likewise, if they are having a unstable condition for that company, what happened to the market price of a share? Increase or decrease? Decrease. Why? We are not going to purchase the shares of that organization. So therefore, what happened to the market price? Going down. Right? So therefore, the finance manager's role is to maintain a proper market price of a share. Right? How that finance manager's role link with this market price of a share? Now you all are looking at this, the values that the conditions that we have identified. Now, how the finance manager involved with that conditions? Exactly. The finance manager is the person who is managing the dividend decision, who is deciding the dividend decision. Finance manager is the person who is identifying the debt and equity component. Finance manager is who is involved in initiating the investment decision. And then if they have the high assets and the high liabilities, so that is up to the finance manager's control. So therefore, financial decisions especially contribute for what? The market price of a share. Financial decisions are controlled by who? Finance manager. So therefore, as the main role of the finance manager, he need to perform well these 4 decisions. Otherwise, what happens to the market price of a share? It's going down. So therefore, we can identify shareholders' wealth maximization means it deals with 4 effective financial management decisions, and ultimately it increases the shareholders' wealth maximization. So therefore, we can identify here wealth created by the company through its action is reflected in the market value of a company share. Is that clear? Is that correct? Yes, exactly. The wealth created by the company through the actions. What are the actions? Financial decisions. Financial decisions. If we, let's assume like this, you purchase Sampath Bank share 5 years back for 10 rupees. Right? But if you go to the Sampath Bank share price today, it may be around 110. How much of increasement is there? 100 rupee increasement is there. Why this has been increased? Just because of the company's name? No, it's because of the effort of the taken by the finance manager mainly. So therefore, finance manager's role is increasing the market value of a share by performing these 4 decisions in the organization, which is identified under the shareholders' wealth maximization. Clear? Okay. So when we are balancing these, when we are acquiring the maximization of the shareholders' wealth objective, you have to perform the financial decisions. 4 decisions we have. When we are taking these 4 decisions, the main concepts that we need to consider is 1, balancing or else trade-off the risk and return. Each and every investment decision or else the shareholders, each and every financial decision involved in the balancing the risk and return. Therefore, finance manager need to concern about this decision, balancing or calculating risk versus return for each and every decisions and take the decisions. Right. Okay. Activity. Assume you have purchased 100 shares of HNB Bank PLC from the open market at 181 each, right? 100,000 shares for 181, right? You have provided the following additional information. Now the net value of a share is 180. The value is 180, but you have purchased it for 181.
And the current market price is now 191. If you have acquired 100,000 shares, calculate your wealth now. How you can calculate the wealth? How you can calculate the wealth? Shareholders' wealth equals number of shares. Number of shares multiplied by the market price of a share. Right. Market price of a share, we can call it as an MPS. Market price of a share. MPS. Right. In the given example, number of shares. How many shares? We have 100,000 shares. 100,000 shares multiplied by what's the market price of a share? Is it 800, 181? No. Is it 180? No, it's 190. The market price of a share. 191. So therefore, your wealth may be it's 19.1 million. Right. Okay. But when this is after whatever the period, right? So, but when we are acquiring this fund, so what may be our wealth? What was our wealth? So this is the wealth now, right? But when we are acquiring the funds, let's assume market price also similar to the 181. What may be the wealth? 18.1 million. What happened now? With the increasement of market price of a share, shareholder wealth has been increased, which is called as the wealth maximization in the modern approach, financial managers objective, main objective. Shall I erase this one? Do you have any doubts on this? Shareholders wealth, number of shares, market price of a share. We are calling it as NPS. 100,000 shares multiplied by 191. It is 19.1 million wealth. Okay. Now, the last part, two theories we have to identify agency theory and the other one stakeholder theory. Right? Have you heard the agency theory? I guess yes. Yes. Agency theory, have you heard it? Agency theory? No. No. Yes. Okay. Corporate governance, it identifies three components. Okay? Corporate governance identifies three components. What those three components are? This is regarding the company's context, right? It's discussing about the companies, right? Companies, they have the shareholders. Stakeholder theory. Again, for the stakeholders, we have the internal as well as the external stakeholders. Who are the internal stakeholders? Employees, shareholders, and then owners, managers, they are internal shareholders. And then external shareholders, external stakeholders. Some external stakeholders who they are government, customers, suppliers, finance and financial institutes who are controlling those things and etc. Who else? Very good. What's it? Investors too. So these are the external and internal shareholders. As the finance manager, do we need to concern on both internal as well as external stakeholders? Yes, exactly. We have to always satisfy our internal stakeholders as well by generating the high profit and distributing the fair dividend for the existing shareholders, for the internal stakeholders. External stakeholders, do we need to satisfy them? Yes, exactly. Why? Otherwise, we can't increase our market price of the. Yeah. So therefore, as a finance manager, he or she need to concern on both internal stakeholders as well as the external stakeholders when he is running this business. Okay, so you can go to these references and have a look at after the lecture. Right. Okay. Thank you very much. Do you have any questions on the lesson? No. Okay, so then we'll go to the quiz quickly.
Madam, good morning. Madam? Hello?
For the latecomers, we have the quizzes for each and every week. Two questions, 2 marks. We may have 12 quizzes. You can miss 2 quizzes and then have a participate for the 10 quizzes, which is reached to the 20 marks. At the end of the each and every day, I am giving you the quiz from the concept that we have discussed.